We're from Group 2 Financial Literacy class.
Hey guys, I am your narrator for this video. Are you having any problem with spending your budgets and money? Be wise by investing for the future. So, today I would like to talk to you about investment. Introduction to investment. What is investment? Investment is a provision of a fund for a certain designated time frame for the benefit in the future. Investment also is a fixed capital asset that includes stocks produced in an economy over a period of time and refers to the creation of the capital goods. Lastly, investment is the number of goods purchased which are not consumed at the present time. Actually, there are 5 investment processes. The first one is we need to spare the money, and then from the money we need to buy the asset, and then we need to hold the assets for the long term, and the assets will finally start yielding returns, and finally we have a regular income or capital appreciation. For the first step, which is spare money, it is very important for us to save the money in case we need to use it in the emergency situation. Next, we need to buy the asset. Asset actually an item of property owned by a person or company regarded as having value and available to meet debts, commitments, or legacies. After that, we need to hold the asset for the long time. Assets such as car, company will start yielding return after a 1-year period of time. Finally, our asset will start yielding return. How the asset will start yielding return is because our asset will have an increase in the interest and value. And then we will have an irregular income or capital appreciation, and we will get the financial stability. Next, we will learn about bull market versus bear market. Bull market is when there is an increase in the market, while bear market is when there is a decline in the market. For bull market, the economy will be growing, the employment rate is high, while the bear market, the share price is continuously dropping, the economy will slow down, and finally the unemployment will be rise.
Types of investment: stocks, real estate, gold, art, cash equivalent. Stocks. A stock is a form of security that indicates the holder has proportionate ownership in the issuing corporation. Benefits of investing in stocks. The stock pays dividends. Not all stocks pay dividends, but many do. Dividends are payments made to shareholders out of the company's revenue, and they are typically paid quarterly. Investments over the long run. Once a company's stock is on the market, it can be bought and sold among investors. You can then sell the stock for a profit if you like. Real estate. Types of real estate: residential, apartment buildings, vacation homes, shopping center, land, office or warehouse. Benefits of investing in real estate. The price will keep on increasing as years go on. Example, price of single-story house in 2010 was 180,000 ringgit, but now in 2020 the price soared to 270,000 ringgit, which makes a profit of around 90,000 ringgit if successfully sold. A better investment than car, as we know that car will lose its value over time, while property will steadily increase as years pass. Gold. There are 3 choices of investing in gold. First, purchasing the physical asset. Invested in the form of gold jewelry, gold coins, and gold bullions. Investors has a direct ownership of the gold. Second, purchase shares of a mutual or exchange-traded fund (ETF) that replicates the price of gold. It is suitable for those investors who would like to invest in physical gold but still wish some exposure to the precious metal. Third, trade futures and options in the commodities market. Gold options and futures are the gold investment derivatives, which are short-term speculation on the future gold price. Benefits of investing in gold. hedge against inflation. Unlike currency where it loses its value when inflation took place, gold will not lose its value, which is why people prefer to keep their money in terms of gold. Tangible asset. Gold is easier to be purchased than other tangible assets like real estate, which creates a perception of safety among investors. Art. Like stocks and bonds, art can increase in value. This happens when artists become successful. Their art will also increase in value. An Art Basel annual report estimates global art market sales reached over $67 billion in 2018. Benefits of investing in art. Art has residual value. Art is a tangible asset. In other words, an art collector who buys an original art print can rest easy knowing that it will always have intrinsic value. Art has potential for growth. Art increases in value as it ages, especially when the art is from a deceased artist. Art diversifies your investments. The art market is growing continuously and the value of the art in that market is consistently appreciating as well. Cash equivalents. Cash equivalents are short-term assets that are easily and readily converted into an amount of cash. Examples of cash equivalents: saving account, money market instrument, guaranteed investment certificate. Benefits of investing in cash equivalent: highly liquid, which means easily and quickly converted into cash by the investor. Have stated interest rate in fairly low risk, short-term, and can be long-term if extend maturity date.
Moving on to the short and long-term investments. To put it into words, short-term investments are those which are marketable securities or temporary investments, and also can be easily converted into cash. The examples of short investments include certificate of deposit, market money account, treasuries, and bond funds. An account a company plans to keep for at least a year is considered as a long-term investment. Stocks, bonds, real estate, and cash are examples of long-term investment. So, this long-term investment can be divided into two: income asset like public provider fund and tax saver FD, and also growth asset like mutual funds and investment in shares. And finally, we will look to the advantages and disadvantages of investments. Some pros in investing includes: first, your investment will grow to financial fortunes. Your value of savings will increase by time. Second, you will stay ahead of inflation. You'll be prepared if there is any sudden emergency that comes in your life. More than that, your retirement will be more secure than before. The more you invest, the more return you'll get when retirement. And fourth, you will definitely obtain financial securities as you invest. Nothing more to worry in the future. Let's take a look at the challenges you'll face when investing. First, you will confront subject to high risk, especially when investing without the required knowledge. For instance, when investing in stock market, the higher the return, the higher the risk. This is due to the stock price is directly linked to the company earnings. If anything happens, the stock prices will also plummet, in which will cause you to money loss. Second, investment will be time consuming. This is why you should perform research and have investment analysis skills to get higher chance of getting potentially profitable stock. And third, you have to be reminded that there are tons of professional competitors who own sophisticated trading tools, financial models, and computer systems.
Well, that's all for today. Thank you. With the cooperation of Sulam, UTM, and UTM ILIC.